Joining me for a look at what's playing out on the market scene at midday is Faheema Adia from Momentum Securities. Thank you so much for your time, Faheema. Glad to see that we are coordinating on the Valentine's colors here, red and white. Yes. Also, the Business Day TV colors. So we are on point.
We chose well.
Yeah, we're on point today. Let's actually just take a look at the kind of optimism that we are seeing in the markets. We're seeing the local market up almost 1.5%. The rand now just below 18 rand 40 against the US dollar. And this is even with all the chaos still happening on the tariff front. What's happening?
Yeah, so I think what's really driving this is we saw actually some positive news on the tariff front yesterday with those reciprocal tariffs, where Trump basically came forward to say that he would not actually be rolling it out yet, and he was now going to consider it on a country-by-country basis.
Okay.
Yeah, so now it's getting pushed out until April. And the market's also hoping that, maybe this is just a negotiating tactic. Perhaps it won't even actually come through eventually. So, yeah, a lot of uncertainty, but I think it was well received yesterday. And then we also had those US jobless claims data come through, and that was broadly in line with expectations. So I think a combination of those factors has set up the JSE for gains today.
Yeah, what's quite interesting because leading those gains are Process and Naspers. Process up almost 7%, Naspers 6%, and then also the PGM counters that are up over 4%. And I mean, when I looked at that basket, I thought to myself, there's definitely something happening in China. But then I looked, I was like, there's nothing happening. Is that still to do with the tariff story, that maybe he won't be so harsh on China? Because also I'm just imagining Donald Trump not being harsh on China.
So actually what's boosting Process and Naspers today is the better performance in Tencent. If you look at Tencent, it's up today, and that's just back on the back of this sort of tech rally we've been seeing in China after the DeepSeek model was released. So that's just created a lot of positive vibe and hype that we're expected to see a lot more development in the AI space on the back of DeepSeek, and that companies will be making use of it a lot more. So that's basically just what spurred that rally there, and of course Naspers and Process is benefiting.
All right. Well, let's take a look at some of the company news that came out of the JSE today. Oh, not good news. Let's actually start off with Avenge. And I mean, I was telling Faheema off air that I have Avenge in my easy equities. And for the longest time, I thought that it was just going and going and going and climbing and climbing. But today, that share plummeting over 28%. I think I must just take this one on the chin. I've lost some money there. Yeah. So, of course, taking out the interim trading statement, flagging that they will be swinging from a profit to a loss. What is responsible for that pain?
So very disappointing. Like you said, we were seeing some steady recovery, and then just suddenly it nosedived on the back of that. So basically what's contributing to that is that Southeast Asian market. They had, I think, 2 projects there that experienced some disruptions and delays. So there were cost overruns related to that, and then I believe that the customer there also has now some claims against them, and that's, I would say, the main thing that's contributed to that massive loss. So if you look at the other markets, actually they did pretty decently. So looking at Australia, profit margins actually improved there. There were unfortunately also some cost overruns, so they broke even. But if we look at New Zealand's performance, that was pretty strong. And locally in South Africa, the Moomins business, they said, also generated some strong earnings performance. So it looks like Southeast Asia was just the lemon for now. Let's hope it was once off and there will be some recovery.
Oh, but when you see a stock plunging by this much, you seldom see a recovery, and even if it does, it's just a drag and very, very slow. So we will see what happens. Let's take a look at Mete, because that also wasn't spared from the selling activity that we saw today. They released also a full-year trading statement that stock sinking 5% or over 5% the last time I checked. Also saying that they expect a decrease in headline earnings per share of as much as 20%. Mete is also another one where struggles are not uncommon, and just when you think it is getting to a good place, it takes you back. What's happening there?
Yeah, so a relatively weak set of results. I think the main issue there was that they are dealing with a big influx, like you said, of imports coming from China and India. So that's affecting demand. And then if you look at the Toyota manufacturing plant, that also experienced some issues during the period, and that impacted one of Mete's subsidiaries quite significantly. just in general, I think they've just been facing weaker demand, both locally and in their export markets, which has really impacted performance. So I do think there are a lot of headwinds away, but on a positive note, I see they have managed to dispose of those Turkish loss-making operations. So the balance sheet is in a bit of a better position, but still some headwinds.
And also less exposure to hyperinflation as well. Well, let's take a look at your stock pick for today. What are you choosing for Valentine's Day?
So I'm choosing Mr. Price for Valentine's Day. So as we all know, Mr. Price is the leader in the discount value segment of the market. It's been taking a lot of market share from its peers over the past few years. And this is considering a consumer that's been under a lot of pressure. They've been just down trading to more discounted options like Mr. Price. It's just more value for money. Looking at the recent results, we saw sales increase quite nicely by about 10%. They also said that they're seeing improved revenue come from the kids apparel side, also from the cellular divisions. And I just expect this momentum to continue. If we look at the return on equity, it's quite healthy at 23%. And I think from a valuation perspective, if we look at it now, after that pullback, it's now trading on quite an attractive value of at a forward PE of about 15 times. So I think it just looks like it's priced for an entry opportunity here.
Well, I know what I want my gift to be for Valentine's Day from anyone, really. Stock in Mr. Price, the shares in Mr. Price, to make up for my loss in a veg. Thank you so much for your time, Faheema. That was Faheema Adia from Momentum Securities.